So the index is set up by looking at 6 different pillars of what we think are important for the development of capital markets. So we have a pillar on market depth, so liquidity, turnover, what kind of availability of products we have, diversity of products. Then we have the pillar on access to foreign exchange. So if you're an investor looking to invest in an African market, what kind of transparency is there in the foreign exchange market? How liquid is the interbank foreign exchange turnover? How open are capital markets? Are there capital controls? What kind of exchange rate regime they have? Then we have a pillar on the tax and regulatory regime and market transparency. So what level of implementation of for example, Basel requirements or IFRS are the different countries at. We have the capacity of local investors. So is there enough capacity to absorb liquidity even for an investor who wants to exit the market, for example? How big are the institutional investors in the country in terms of pension funds and their assets? We look at the macroeconomic environment, not just the economic growth, but also how transparent are the different economies. Do they report their budget regularly? Do they report the outcomes of their monetary policy committee meetings regularly? How competitive are their exports? And finally, we have the legality and enforceability of financial markets agreements. So what are the insolvency frameworks, for example, and what level of implementation they are there. So these are the 6 pillars that make up the index, and these are the headline results. You also see the results of last year. This year we added 3 new countries, Angola, Cameroon, and Senegal, so it's not really possible to compare this year's results with last year's because there have been some new entrants, but it's still possible to see some broad trends. So South Africa is still at the top, but it's lost a little bit of its performance. It's weakened its performance compared to last year, especially on the Pillar 2 and Pillar 3. We'll go into that in more detail. There have been some challenges in terms of its macroeconomic opportunity as well. We've seen some movement in the overall performance of the country. So we've seen countries such as Kenya, Nigeria move up. Countries like Mauritius or Namibia, which are still ranking very highly, move down. Other countries further down that have moved up, like Seychelles, for example. And it's really about assessing how the progress has been from one year to the next. That's the other value of the index, for countries to be able to benchmark their performance against their peers, but also against themselves. Because we expect to always keep seeing South Africa at the top, that it is the most developed financial market in the continent, but how does it do compared to what it was doing last year? So that's another interesting takeaway that we hope the report has to offer. So here you can look for the different countries. There is more detail on how they've been doing. And then on the next page, you also see how they're doing on each individual pillar. And here you can really see that there is one way to be at the top. So South Africa does very well on all 6 pillars, but there's many ways to come perhaps in the middle or do less well. So, for example, Botswana does very well on pillars 2 to 6, but it has an average or close to average score when it comes to the market depth, pillar 1. Or Mauritius, which does very well on most pillars, in fact, better than Botswana in some, it has a very low level for capacity of local investors, below average. So again, you can see that there is this detail of the different 6 pillars allows policymakers and investors to really look what are the gaps, what are the quick things that we can fix with each of these policies that we can put in place. So overall, when we compared how countries did with last year compared with this year, we saw some improvement. A lot of economies are putting in place policies to improve the development of financial markets. The Twin Peaks regulation, for example, here in South Africa, separating the regulation. Also, some countries moving towards more open markets, more flexible exchange rates, reducing capital controls. So overall, there is a willingness to open financial markets, and as you will read in the forwards that some of our partners have written, Jing Donghua from the IFC, for example, or President Adesina from the Africa Development Bank, as well as Maria Ramos, they all highlight the importance of capital markets in really financing and bringing us to this next stage of the development of the African continent. There's never really been a story of markets growing without efficient capital markets. In the same way that you have social infrastructure, that you have physical infrastructure, you also need the capital markets to really connect the savings to investment opportunities and enable countries to grow and have more funding opportunities domestically.